Hello and welcome to this session in which we would look at the expenditure or acquisition cycle. And eventually when we buy something, what do we have to do? We have to pay for it. So expenditure or acquisition, and obviously payment, because you have to pay for your goods. Sometimes you pay for your goods immediately. Sometimes you pay for your goods later, where you purchase them on credit or on account. So in this session, I'm going to take you through an overview of this cycle. Then next, we would look at the internal control. We would look at substantive testing. We would look at test of details. Step by step, we would look at analytical procedures. But if you don't understand the overall picture, how does the cycle work, then you will have difficulty understanding the cycle. So what is the expenditure cycle or expenditure and acquisition cycle? It represents steps that a company undertake from buying, from purchasing, to paying for goods and services. So when they buy something, they pay for it. As far as we are concerned, it involves three main types of transaction. First is the acquisition part, which is the purchase. You have to make the purchase first, the acquisition. Then eventually you will make the payment. Cash disbursements. And sometimes what happens is this. You might return some of the product that you purchased. You might get an allowance for some sort of a credit for the goods. That's fine. And sometimes you may get a discount for early payment. So those are typically the transactions that you will see in the accounting cycle. Buying, paying. Buying, returning, then paying. Buying, getting a credit, getting a discount, then paying. And each step in this cycle make sure that the purchases that we make are authorized, that's important, recorded properly, and paid appropriately for the proper amount. So whatever we purchased is authorized. We recorded this. Well, the recording, it doesn't really matter. If we don't record it, the buyer will come, the seller will come after us, right? But we're supposed to record it from an accounting perspective, and eventually we have to pay. So in this session, I'll go over an overview. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Hello, my name is Farhat. You are here because you are either an accounting student, a finance student, or someone who's studying for their CMA or CPA exam. Great. You are looking for some additional help, and we can help you. I strongly encourage you to visit my website, farhatlectures.com. I offer additional lectures, resources, including PowerPoint slides, multiple choice questions, in some circumstances, exercises, and true-false questions. Our material is aligned with your CPA review courses, with your CMA review courses, with your college courses. I offer a risk-free trial that you can try to find out whether my website can help you or not. If you find it helpful, you subscribe, you keep your subscription. If not, you cancel and your risk is free. If you like this recording, if you like my lectures, you would like what's on the website, give me a chance to help you with your college courses as well as professional certification. I hope to see you on the website.
The first thing I want to do real quick, I just want to kind of accounting 101, make sure you understand this cycle from an accounting perspective real quick. Then I will go over the documents, the roles, the steps, so on and so forth. So when we buy something, let's assume whatever we purchase, this could be a purchases, this could be an inventory account. We purchase 1,000 worth of inventory. We debit inventory or purchases. Again, purchases could be, you can think of it as inventory, but don't worry, we're going to have a whole cycle about inventory. So if we debit purchases, we credit cash. So that's one way to do so. And sometimes what we do, we purchase something and we purchased it on account. So we debit purchases and credit accounts payable. Now, if we make a return, what's going to happen? Let's assume from this $1,000. We returned, I don't know, $50 or $100. What do we need to do? We need to reduce our payable 100. Now our payable is 900, and we need to, if we reduce our payable, we need to increase our returns. So that's 900. Let's assume we pay within a discount period and we got $50 of this deal. Then how much do we have to pay? We have to pay $850. We credit cash $850. We got a $50 discount, 50 not 500, $50 discount, and we debit payable 900, and now the balance of the payable is zero. So we make a purchase on account, we pay within the discount period, and we made a return. That's fine. That's typically what you have to be familiar with. Now, if everything that I did seems odd or foreign to you or difficult, go to Farhat Lectures, look at my Financial Accounting 101. This is Financial Accounting 101. You need to know the basic journal entries. Now also, rather than buying inventory in the purchase cycle, we can buy property, plant, and equipment. We can buy prepaid. We can incur expenses, because sometimes what we do is we incur an expense. We debit an expense and we credit some sort of a payable, whether it's administrative or selling expense. But those are typically the accounts. But notice here, oftentimes, the purchase cycle goes through the accounts payable. And this is why I made it a little bit bigger to show you that accounts payable is a major part of this. Therefore, we're going to be looking at accounts payable, then make the payment. But this is what we'll be looking at. Then the second thing I want you to be familiar with in this cycle is the documents. And that's important. As an auditor, as an auditing student, as a CPA candidate, or as an auditor as well, you need to know which documents are involved in this process. So let's take a look at the documents, because this way we make sure that whoever's responsible for this document, we understand their role. What's the role of the document? Who's responsible? First one is something we called purchase requisition. When you want to make a purchase, you fill out something called purchase requisition. We're going to look at one, go through an example, but I want you to be familiar with the documents. I call it PR, to request a purchase for goods and services. Then next comes the purchase order. Once we request something, once it's approved, it goes to the purchasing department. The purchasing department will issue a purchase order. It's the formal order to issue to the supplier, asking the supplier to ship the product for us. Once the supplier ships the product for us, we receive it, we prepare a receiving report, confirmation of the received item. Now we're going to see later that those are three-way matching. We're going to see that later. Actually, sometimes those are enough to record a liability. Sometimes what we do is we wait for the vendor invoice. The vendor invoice, whoever we purchased from, they send us a bill for their goods and services that they provided. And basically, once we have the bill, then we can match those three and say, okay, now we have a legitimate liability. Another document is involved something called the debit memo. Well, as I told you, sometimes we might return a product or we might get a discount because something is broken or the wrong color or the wrong size. It's recorded in the debit memo, notes of any price reductions or return. Then we have a voucher. What's the voucher? The voucher is a complete record of the transactions, including the supporting document. This is a term, and basically we're looking at these four documents. Those documents put together, they're called a voucher. And I'm going to put one for you together as we go through an example. So let me show you this process step by step. Now we got familiar a little bit with the documents, we're going to use them. So the steps, the first thing is, as I told you, we initiate a purchase through a purchase requisition. Then we order the item. Then we receive the item. Then we prepare a receiving report. Notice the documents that I keep mentioning. Then we record the liability once we have the vendor invoice. Then we make the payment. Starting, let's walk through an example step by step. Initiating a purchase. So how does this process start? Well, let's assume a manager in a store needs 100 tablets for an upcoming sales event. That's what they need. Or they need 100 tablets for their IT department. It does not matter. They need 100 tablets. Now, this manager cannot go on their own, go online and order those 100 tablets. If they work for the company, what they do, they fill out something we called a purchase requisition, specifying what's needed, the quantity, and the description, and for what purpose. And the purchase requisition might look something like this. This is the company name. There's a specific number for the purchase requisition, the date that they made the request, who made the request, John Smith, and it's the IT department. So the IT department needs 100 tablets, 10-inch Android tablets. They estimate the price to be $250. The total cost will be around $25,000, and they will place the reason for request to provide tablet for sales team for remote presentation and customer interaction. Now, all what they did is they made a request. That's all. This is an internal document. Then this internal document needs approval from the manager. Now, once the manager's approved it, MF or whatever the manager is, and they put the date, whatever the date is, then we have a purchase requisition that goes to the purchasing department. Now, you have to understand where these documents go. This is important. This document is reviewed and approved, as I told you, acting as a safeguard against unauthorized purchases. Once it's approved, the requisition is sent to the purchasing department to determine whether the items needed to be ordered externally or if they have them already in the warehouse. Now, also one copy of this document goes to the accounting or billing. So the accounting also get a copy. Accounting or billing, whatever you want to call it, sometimes they're together, they get a copy of this purchase requisition. Now, let's take a look at a multiple choice questions from farhatlectures.com. The acquisition classes of transaction and the acquisition and payment cycle do not include. So be careful of the word do not include. Do not include property, plant, and equipment, raw material purchases, sales return, accounts payable. Which one it does not include? Well, do we buy property, plant, and equipment? Yes, that's part of the acquisition cycle. Also, you're going to see it's a slightly special part. Nevertheless, you're buying, so it's included. Raw material, yes, raw material we purchase raw material, we purchase finished goods inventory, we purchase supplies, we purchase all sorts of goods and services, so that's also out. Sales return, is this part of the acquisition cycle? No. Sales return, by definition, it's part of the sales cycle that we looked at in the prior recording. Accounts payable, oh yes, that's a big part of the acquisition cycle because most purchases are made on credit, made on accounts payable. Therefore, they sit in accounts payable first before we pay them. So what we did in this session is went through an overview of the cycle. Now, what's the next thing to do? Is to study the internal control. So we go through the cycle, what should be done for a company, or how it should be, how these steps should be set up, so we have proper internal control in order to have a proper system, in order to be able to audit that cycle, audit that system. What should you do now? You want to go to Farhat Lectures, look at additional resources that's going to help you, whether you are a student, CPA exam candidate. Invest in yourself, the best investment you can make.